The dragons slow down China's economic growth stumbles. China's economy is not the powerhouse it once was. In 2024, its growth slowed to 4.9%. That's below the government's own target of 5%. It's a clear sign that things are changing. The global economy is struggling, and the threat of a trade war with the US looms large. These factors are creating uncertainty and impacting China's economic performance. This slowdown is a big deal for China. For decades, the country has enjoyed rapid economic expansion. This growth has lifted millions out of poverty and transformed China into a global economic power. But the recent slowdown suggests that this era of rapid growth may be coming to an end. The Chinese government is well aware of the challenges it faces. They are taking steps to address the slowdown. These include boosting domestic demand and implementing fiscal and monetary easing measures. But the outcome of these measures remains to be seen. The future of China's economy is uncertain. The country faces a number of challenges, both internal and external. How the Chinese government navigates these challenges will have major implications for the global economy. Exports, the lifeline of the Chinese dragon. China's economic miracle has been built on a mountain of exports. In 2024, the country's exports hit a record $3.5 trillion. That's a testament to the vast manufacturing capacity China has built up over the past few decades. From smartphones to clothing to machinery, China makes it all and ships it all over the world. These exports are China's lifeblood. They provide jobs for millions of Chinese workers, and they generate the revenue that the government needs to fund its ambitious infrastructure projects and social programs. But China's reliance on exports also makes it vulnerable. A significant portion of China's exports are destined for the United States. In fact, the U.S. is China's largest trading partner. This dependence on the U.S. market is a major risk factor for China, especially now as the threat of a trade war between the two countries escalates. If the U.S. were to impose tariffs on Chinese goods, it would deal a serious blow to China's export-dependent economy. Chinese factories could be forced to close, leading to job losses and economic hardship. It's a scenario that the Chinese government is desperate to avoid. The tariff threat, a sword hanging over China's head. The trade war between the U.S. and China is back on. And this time, the stakes are even higher. U.S. President-elect Donald Trump has threatened to slap a whopping 60% tariff on all Chinese goods entering the U.S. That's not just a slap on the wrist. That's a full-blown economic assault. These tariffs are designed to protect American jobs and businesses from what the U.S. sees as unfair Chinese competition. But they could have devastating consequences for China's economy. A 20% tariff alone could shave 0.7 percentage points off China's GDP, according to Goldman Sachs. Imagine the damage a 60% tariff could inflict. The impact of these tariffs would be felt far and wide. Chinese businesses would see their profits dwindle. Consumers around the world, including in the US, would face higher prices for everything from iPhones to sneakers. And the global economy, already on shaky ground, could be pushed into recession. The threat of these tariffs has cast a long shadow over China's economic prospects. Businesses are nervous, investors are jittery, and the Chinese government is scrambling to find a way to mitigate the damage. This is a high-stakes game of economic chicken, and neither side wants to blink first. So, what really happens when tariffs start to bite? Well, tariffs can lead to higher prices for consumers, which can reduce spending. Businesses might also face higher costs for imported goods, squeezing their profit margins. Over time, this can slow down economic growth and even lead to job losses. It's a chain reaction that can ripple through the entire economy, affecting everyone from manufacturers to retailers to consumers. China's response to tariffs has been multifaceted. They have implemented measures to stimulate their domestic economy, such as tax cuts and increased infrastructure spending. Additionally, China has sought to diversify its trade partnerships, looking to other markets to reduce reliance on the United States. By doing so, they aim to mitigate the impact of the trade war and maintain steady economic growth.